What's up, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is December 2nd, 2021. This is our late night edition here. Let's take a look at these headline indices. We're going to jump into, this market bounce, put it into context, go through my trades. Before we do all that, quick first disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's dive in here, team. S&P 500 is measured by the SPY, closed up 1.53%. Really nice bounce today. Nasdaq QQQ is actually our laggard today, closed up 0.72%. IWM small caps finished up 2.79%, our big winner on the day. And the Dow Jones closed up 1.81%. So as you can see, the areas of the market that have really been getting hit and the laggards were actually the biggest leaders today. Volatility came in on all of these indices, which is a good thing. It's exactly what we wanted to see. You can see the VIX was down 10.19%. Always good to see that, especially when the VIX blows out like it did. But keep in mind, this VIX is still very elevated. It is still above a 25. So it's not like we're completely out of the woods yet. And then take a look at our market breadth. Market breadth was very strong across the board. We had 91% advancers in the SPY, and then our weakest breadth was in the Nasdaq, which had 73% advancers. And so let's go through. Today we're going to check out, before we dive in, we're going to check out our equity indices, because there were some key differences between the action today and the action really over the past, week or so. And the main difference was that today, let's take a look at our hourly chart. We didn't get some colossal gap up this morning. So check this out. We had, the huge selling into the close yesterday. I'm sure everyone remembers that. We hit a low of 44.97.75 on the S&P 500. And rather than, oh my gosh, it's a huge gap, let's do it, boom, market's up like 1.5% off the open. A lot of times when that happens, that really invites sellers to just come in and sell off the market. Today we really opened just pretty much flat. So we opened up flat. I believe it was right over here. Yeah, we opened up flat. And then in the morning you can see around like 9 o'clock to 10 o'clock. So within that first half hour of the market being open, that's where we really saw our big move. So we had a big push higher up until about noon. And then from there, I think a lot of traders and whatnot were probably pretty frustrated, because all we really did was chop around for the next few hours until the close. So yeah, I think that's a much better setup, opening up a little bit weak and then building on that price action throughout the day rather than the reverse. And you can see we have our futures open for this overnight session. S&P 500 futures, right now they're actually down 0.22% overnight. So I actually think this is a good thing. I think it's a better setup if we gap lower, because here's the really interesting dynamic. When the market's flying high and everyone is just like so pumped, everyone's making a ton of money, it's very tough to actually, like, if you are a buyer in the S&P 500, you want to get the best price, or really any stock. A lot of these big players, they're searching for that optimal price. And so what happens is, they can't really get that when the market's just ripping to the upside. And even when the market dips, that's almost an excuse for more buyers to just step right in and keep it propped up. Because everyone's like, oh my gosh, we haven't had a dip in so long, let me buy it. Now we've officially hit that point where we've dipped so much that instead of being in a greed environment, we're in a fear environment. And it's so easy to get liquidity, because all you have to really do is just let the market fall a bit. And there's going to be players that are willing to sell you, whatever they have at these lower prices. See, I actually think it's good. If we were to gap down tomorrow, I think we could spook a lot of investors and, just have more puking on the open. And, we'll see what happens from there. We'll have to take it from there. Let's take a look at our hourly chart. And here's the key levels I'm watching. This 4,600 level is huge. I believe it's at 4,600 or 4,610 where the dealer gamma flips positive. So definitely want to keep an eye on those areas. And I think if we do get some sort of upside auction, I think it's very likely that we test the 4,600 level. Let's take a look at our Nasdaq. Nasdaq down 0.26% in the after hours, but you can see had a nice candle today, and it's really just consolidating below this monthly value area. Let's check out the Russell. Russell had an epic day to the upside today, but it's so, thrown into the abyss on the downside that even having a really good day, we're still nowhere near this bottom of value. You can see the Russell's down 0.57% in the after hours, retracing some of that move to the upside. Dow Jones is down 0.18% after hours. Same exact deal here. Great day for the Dow Jones, but still very far away from value. And what's interesting is that, today we got a bunch of bad headlines from the Fed basically saying, hey, taper, might have to speed up, inflation. And the market was able to remain bid. So I think that's a good thing. But for the most part, I think the main thing to watch, for everyone, I've been saying this for the past couple days, is the VIX. The VIX is still in this danger zone. And when the VIX is this high, that's basically, more potential energy for the market to move. You can get these really big swings to the upside and the downside. So, hey, I think it's a good thing that, the VIX closed lower, nice red candle. But, I'd love to see another red candle for sure. I mean, we're still in this super volatile range is what I'm trying to say. I think once we get, below a 20 again on the VIX, that's when it's like, okay, it's safe to, officially we're not really in this like, left tails or elevated environment. Let's take a look at our sectors and style factors. Oh yeah, and one other headline that did come out, the budget for the United States government in terms of the potential, government shutdown, government funding gap. That was actually, we were able to successfully kick the can down the road to February. So that happened, which is a good thing, takes some uncertainty off the table. Let's take a look at our heat map for today. And you can see, most of the market traded higher, which is good. But we did have some selling in those safe haven assets that everyone had been piling into when the market was super weak. Apple had a headline that, iPhone demand might be slowing. And it had a huge gap down, but, the price action was very strong intraday. See, it closed down 0.61%, nice green candle, pretty much closed, very close to the highs. But yeah, everything else was very buoyant. And if we look at our sectors, you can see we had home builders up 3.43%. We had real estate up 3.04%, regional banks up 3.4%, transports up big. So a lot of these sectors that are more like value centric. Let's take a look. Some of these laggards, only a couple of groups that did not advance. For the most part, really nice breadth in terms of, just sector participation. Style factors. Best performing style factor was cyclicals, up 3.03%. I think that's a good sign. Second was high beta, up 2.54%. And our worst performing style factors, you can see growth was up 1.1%. And you can see defensives were up 1.4%. But what we're still seeing is, we're still in this really challenging environment where a lot of these stocks, if there's, a bad catalyst, etc., they're just getting mercilessly sold. It's like DocuSign, for instance, reported earnings after the bell. Take a look here. DocuSign is just like literally down 30%, after the bell. Let me see. Is this 30%? It closed out at 233. Yeah, pretty close to that. This is not good. So yeah, for a lot of these stocks that have crazy valuations, I believe Asana is down as well. I think Asana could honestly have a lot more room to the downside. It's at 76. And this one, what I noticed about Asana is, take a look at this. So Asana just had this like monster run up. And while this was happening, I was like, what the heck is going on here? This is crazy because I use Asana for Pristine Capital. So I like Asana. I think it's awesome. But this stock was trading at like, it was ridiculous. Oh my gosh. Yeah, it was trading at over 100 times sales. Now it's trading at 56. After tonight's carnage, it's going to be even lower. So this thing is getting a quick 50% haircut, team. So this is the downside of a lot of these growth stocks that I've talked about in these videos numerous times, like Cloudflare. This thing was trading at well over 100 times sales too. Now it's at 93 times sales. Like, there's a lot of traders out there that they get super excited for these stocks, and like they wait until after the stock has already had an insane rip, and they're like buying it in here, like they're hoping it goes from like 140 to like 200. But the valuation does matter, especially when the Fed is tapering. You know, when you buy a stock, you know, really does matter. So yeah, you can see like maybe if you weren't participating in this stock, you know, maybe you missed like this leg up from 100 to, you know, 140, and you're like, oh my gosh, I gotta get in it now. You know, now the stock's trading at like 75 bucks. This stock could still have a ways to go. The reason why I say that, the product is so similar to Zoom. It's basically like project management software, almost like I consider it like Zoom, like business software, or like Slack, or like a Discord or whatever. Just like software that you might have your team in. You know, they can plan projects, you can assign work out to people. Great software, but you know, it's not like it's curing cancer or anything like that. Zoom had a very similar trajectory, and this one now trades at only 16 times sales. It had a crazy move to the upside, and this thing was trading like up to the high heavens. This thing ended up coming back down to earth, so I think Asana could have a similar fate here. Yeah, so there are still some stocks that are really getting, you know, taken to the woodshed. Let's take a look at how our cryptos did today. Cryptos are still remaining buoyant. We had Bitcoin right now down 0.11%. Pretty much still just consolidating here. And we're getting some good headlines. We actually got a headline that Goldman Sachs, and I believe some other banks, they're exploring Bitcoin-backed loans. That is huge. But, you know, the price really isn't moving. You know, we're down 0.11% late at night. So we'll have to see. We're going to get a directional move pretty soon in Bitcoin. We'll just have to see which way this moves. The miners got killed today. Take a look at this. Bitfarms down 5.26%. Huddy Mining reported that their production was down slightly of Bitcoin month over month. This one just got absolutely taken to the woodshed, down 11%. So this is like a classic, you know, liquidation event in a lot of these stocks, to be perfectly honest, where if your stock is not trading at like a perfectly cheap valuation and it has the slightest mess up or slip up, you're really going to get taken to the cleaner. So in this environment, you know, it's super important to know what you own, know what your max risk is, and you know, in an environment like this, it does help to, you know, hug the index a little bit more. So that's what I did today with my trades. Take a look here. So my big trade for today was I got long some SPY calls, and we talked about this setup yesterday, that when the VIX closes above a 31, the win rate is very high and the expected return is very high over, you know, a 20-day horizon, 60-day horizon, etc. So I was like, you know what, I'm going to buy these January 2022 450 calls. Got these right on the open, so I was able to participate in pretty much all of the upside. When I put these on, SPY was up maybe like 10 basis points. Then it ended up going up, you know, like well over 1%. So I put this one on. And then Playboy, they announced a partnership. This one I just put on like a small starter position. They announced a partnership with Cardi B, and I think that is so cool, because Playboy's whole brand is centered around sex. And I think Cardi B is like one of the biggest sex symbols, you know, really of our generation. So I think with Playboy, the big concern is like, it's too old school. Hugh Hefner, like this young generation, they won't be into it, whatever, the world's moving on. So I think getting together with Cardi B, I think that's a huge win. And really not only that, that's just kind of like the cherry on top, honestly, and more of like a trigger. But this is a small cap stock, and look at the small cap ETF here. Absolute washout over the last month, but Playboy has not had a washout whatsoever. Playboy's really, to me, this looks like it's being accumulated. Because the index is so weak, but this stock is just remaining buoyant. Finished up 6.31% today. So I'm just trying to pick my spots. I'm trying to add positions. If I'm adding them, I'm trying to do that when the market has huge dips. Like if tomorrow ends up being up, like I'm not going to be like buying a bunch of stocks and whatever. you know, for me, because we're still in this elevated VIX environment. So let's see how we're doing now. But yeah, so I'm just trying to take it one step at a time. This is a really challenging environment. And I know there's a lot of traders out there that are getting super worn out by this environment. If you feel like you're getting worn out, best to just slow up your trading. Slow up your trading. Don't do as much size. Keep it simple, keep it small, and make sure you're getting up from the desk and you're not just like glued to the price action all day. Of course, you have to be, you know, watching the market, you know, whatever, doing your homework, making sure you're managing your risk. But you want to make sure you're getting some time away from the screens. If you feel like, oh my gosh, you know, this is horrible, you want to make sure that, you know, get it from the screens, do something else. You know, you have a hobby, you do that. And just something to take your mind off of, like, you know, on a day like yesterday, oh my God, like I'm just watching my account balance all day or like whatever, because that's going to cloud your judgment and then you're going to miss out on good days like today. Because I'm not going to lie, there were a ton of investors that completely lost their composure yesterday. I was looking at Twitter and it was like, oh my God, like the sky is falling, the market will never go back up again. And here we are, today was a great day. But let's just take it one day at a time. That's exactly what I am doing. Before we wrap, let's take a quick look at our options order flow. Let's see. Let's take a look here at our options races. Let's see, we have Tesla. I noticed there was more flow in Tesla again today. Let's see, we got 3 billion. Okay, we're gonna keep going. Okay, 3.6 billion for Tesla. We have SPY, Elevated, UNH, United Health. That rarely pops up. Let's take a look at that one. But other than that, you know, these are all the usual suspects. Let's take a quick look at UNH. Yeah, UNH looks pretty decent. Really hasn't had a huge drawdown. Closed slightly positive today. Not too bad. Let's take a look here. Let's go to our Tradescape. Let's see what we got going on. Another good thing is the put to call ratio for today was above a 1, which is great. It's exactly what we want to see. We want to see people just insuring all their positions. You know, rather than just like, oh my gosh, everyone's buying calls again. You can see for the SPX, nice mix of puts and calls. Tesla, basically a lot of puts going up. Let's actually take a look at the Tesla chart. Yeah, Tesla, you know, the chart remains intact, but this is another one where, you know, we're going to have to see how it resolves. We're seeing a lot of big red candles here. So could this one go down to the 50-day moving average? Certainly could if the market continues to be dicey. A lot of investors own Tesla. We see, you know, everyone owns calls on this stock. UNH, yeah, it looks like a lot of players, they're going to safety. So their positioning is like, okay, let me buy a conservative healthcare name. They're not really going for like, let me buy this super speculative EV stock. You know, they're not really doing that. AMC puts going up for AMC. So RIP to all those AMC bulls. This chart doesn't even look like horrible. But yeah, you can see AMC is going down to the low end of the range. Let's see what else we got. Amazon. Amazon mostly puts. I keep seeing a lot of positive headlines around Amazon, like new people going on to AWS. So this is definitely a stock I'm looking at. You know, just in case it's like, you know, I want to put cash somewhere, you know, and somewhere like relatively safe, etc. You know, Amazon I think is always a good candidate to do that. But Amazon has just been such a range-bound stock. With Amazon, it pays to buy the dips and sell the rips. And now we're getting a pretty big Amazon dip here. Let's take a look. We'll check out. Let's see if anything else looks interesting. AMD. Mix of puts and calls. And AMD, I believe this one held support today. Check out the daily. Let me pull it up here. Yeah, AMD closed at 1.05%, and it just held on to that 20-day moving average. This is another good one, you know, to just watch tomorrow. That being said, that about does it for this market recap video. You know, just make sure you're keeping your composure, getting up from the screens when you need to. You know, make sure you get your lunch break every day, that sort of thing, and just take it day by day. That being said, I'll see you all tomorrow.